What's happening? Happy Tuesday. Welcome back to the Daily Profit Plan. All right. What's happening, folks? Let's get started. We are looking at a little bit of a end of month and a quarter push. Is it going to be faded all day like it was last week? Maybe. Do we have a little bit more of a relief rally off of nearly that 10% correction? Maybe. I know the video is on YouTube, youtube.com/Chris Pulver, youtube.com/Financial Wars. That's where the video is at. I'll share the screen. You get the screen share. You just can't see my face. That's okay. You can see me on YouTube. All right. Chat is up for Zoom. Chat is up on YouTube as well. Good morning. Carved out a nice 2 for 2 yesterday. It was interesting. I was in a live session yesterday, right into the close, and still ended up grabbing a winner. We needed price to stay above 68.35, which was not below my expected box move. So I in a way, I kind of made a mistake yesterday. I played the deltas. I did 10 deltas on the daily profit play. It worked out okay, but still, this was a 100.81. We ended up moving for the day about 76. We talk about this stuff every single day, right? This is why I also choose the higher of the two. Tasty was like 100.83 on the expected move, and Thinkorswim was like 51. Look at what price did. Okay. Price at one point was down 100 points from the open. I'm not saying that Tasty's better, but holy crap, that's pretty accurate, right? 100.81 expected move. And again, this would be a box one. If I change my indicator here to a box one setting, watch box one. Let's see. Well, I actually gap adjusted. Let me go box one. Why wouldn't it start from the opening price? Oh, there's this close. Never mind. I was thinking from the opening bell price. Box two is gap adjusted, but the bottom, yeah. Never mind. It was so this is where the market opened. We had 100 plus points on the day, but it bounced back up at the end. From the close, my expected move box was down here towards 62, 68, which is why I was playing defense yesterday. We were trying to play that defense around the 6,300 handle. We had defense all the way down to like 62.80 with broken wing butterflies. We could have defended this level around 62.70, but it came down to 63.17. So it did make fresh lows. The little gap up faded all day. Is it going to be a rinse and repeat of that today when the market's up over 1%? It's very possible. But again, anything can happen. Plus minus on the day is 68.52 is what I'm seeing pre-market right now on Tasty. 66.73. This is different now. 66.73. I literally just wrote this down. So I'm getting 66.73. I doubt that Thinkorswim is higher than that, but who's got a Thinkorswim handy? 56 on Thinkorswim? Okay. So still lower. Taking the higher of the two. 66.73. Change the expected move box to 66.73. And make it gap adjusted. We are going to have another big fat gap to the upside. So, just another day. And I ended up getting pretty lucky on a trade later in the day. Like I said, I was in a live webinar. Final minutes, ended up seeing price here. I can go to the 1 minute time frame. I closed out a 63.50 pin price when we had price at this high was 63.49.94, 6 cents away in the final 5 minutes. High of 63.48.88 in the final 4 minutes. 63.49.53 in the final 3 minutes. Ended up closing out a nice little profit trap with the pin at 50. And glad that I did because my break even price, it was a 5 wide, and that 5 wide butterfly spread trap would have failed me at 45 because it was a 63.55 by 63.50 by 63.40, and that profit trap would have failed me. It would have taken a partial loss had I let it close, but I ended up grabbing a profit trap right around that like 48, 49 hit for those final few minutes. Very lucky on that. Obviously the market could have just stayed at the lows all day, but it decided to get back at the biggest gamble level I saw on my software was 63.50. I was kind of playing that throughout the day. And once price was coming down here, I mean, I put in a broken wing I got filled for one trade got filled for $1. Another trade got filled for $4 in addition to the profit trap at 50. So it worked out pretty well. Ended up grabbing like $1,300 yesterday on that trap and 2 for 2 on the daily profit play. But, felt luckier than good because even from the very beginning of the day, I didn't put my puts where I really wanted them. We probably could have went a little bit lower and wider. Like I could have done a 15 or 20 wide down here and hope to get filled for at least $1. But anyway, it is what it is. Recap is made money, went 2 for 2. Did anybody hold on to the trades for the day? When this market was coming up later in the day, I needed to stay above 35. 35 is my line in the sand. So, I mean, I was protecting profits here. We had the 35 strike and the 30 strike. So I let the 30 expire, took the 35 for profit, ended up grabbing $170. Okay, good stuff. All right, comments here. Moses, what's happening? Mark, good stuff. Defended my 1 day early XSP losing trades, bear call spreads, and credit spreads. Yeah, good, man. That would have worked out great. A little bit of defense. How did you? I mean, did you do a good job of like washing most of it? Just taking some trades off. Yeah, I mean, look, I hate to say it. I mean, nothing about this market right now looks or feels good. I was, on the road late last night and caught up on some, sessions and podcasts that I typically get over the weekend. But I mean, is it 2022 all over again? Not necessarily. It's like at any time the market knows that we could see a taco squeeze, but I think that the true sign of what this market cares about right now is oil prices at $100. I think that going into something like the futures market on a 1 hour time frame, like the 1 hour. So that Monday Trump tweet right here, that was literally the push and the high of the entire week, and it faded all week long. This is the market now, right? This is the market. So point is, I mean, yes, there could be a squeeze, but I think unless things are truly resolved, anything that gets pushed up and if at this point, like I'll put let's go, futures wise, if we push back up to like 66 or even up to 68, to me, I think that is a spot to consider looking to fade, the tops around 77,000 or 70.50 again. Again, define risk trading, but I went through my managed portfolios last night and I built out actually my workspace. And so I went through all my workspaces. I have been trying to think like if I went through, I don't know, I'll go to SPY. Okay. So these blue lines represent where I have some exposure. 590, 593 is exposure on the SPY in May. 500 is my exposure out to like September and November, December. I mean, so what I'm experiencing is volatility in my portfolio, but my lines of safety are still pretty low, and the market could still have plenty of wiggle room. I'm not saying I want this to happen because it's going to be a nasty market if we end up testing some of these levels. But stuff like Micron, which is down 10% yesterday, Micron is getting smoked right now from these highs, which we did broken butterfly top this thing around that 500 level. But I have a trade on Micron that is all the way back down here to $65. Is it still in jeopardy? Sure. Anything could happen. But Micron has to fall from these recent highs. It has to fall 85%. And I'll take some assignment. But I don't want that to happen. There's I mean, even trades like Humana, This one, I'm probably going to take some assignment on and repair it. I have a ratio spread that gives me like a 5 or 10 wide profit trap, and so I'll own some shares. I'll do a quick repair. I'm not going to sit and hold this thing. If we get a squeeze like we did on UNH on United Health Group last year, this thing squeezes back up here. We've got lows around 205 to 208. We got gap fills around 222. I will just repair this thing for like $500, $1,000, and that's it. So anyway, went through the whole portfolio last night. Um, I don't have a lot of troubled positions. I just have a lot of volatility in the VIX at 30. So what is it today? Even though the market is up over 1%, take a look at some gamma today. We've been in negative gamma a lot. Okay. This is crazy, by the way. You don't see this a lot. Look at this. Okay. 64.75 is red. Is this somehow this is the JP Morgan collar trade that I talked about yesterday? It is a monster position. Somehow, I don't know. This is a wild setup for a zero DT. But if this market is interested at all in trying to get back up there, um, that'd be quite the rally. I mean, we are going to rally back up above 6,400, I think, with the gap today. So we're up over 1%. You got SPX, the CFDs at 64.15. So let's just take the futures feed around 1.1%. So 1.1% puts us up to around 64.12. Could we go 64.12 to 75? Well, there's your plus, 66 points on the day. Could we fill that gap? Yeah, sure. Okay. Is it possible to get higher than that? I mean, our defense trades, we have an engineered options for today's expiration, 64.90. 64.90 to 6,500 would be ideal. That might be a lot to ask for from yesterday's close to that level. We'd have to be pushing, 2.3% on the day. So it's a tall task, but we also got filled on 2 engineered option trades yesterday. Which I need to just update in Telegram. So the April 6th, we've got the participation and break-even trades on April 6th. So this is filled. Okay. And we put in those iron condors based on the 26 VIX. So we'll see if those levels are also somewhat safe. Maybe. So time will tell. But these monthlies, 51, 52. Yeah, it's the SPX butterflies. We'll see. I might get lucky in a couple of these. I got an end of month butterfly in here above the 6405 handle. So I've got some pins. I don't know. I might get lucky in here with a couple of pins. $1.50 with a what is this one? This is 20 wide. And this one is 20 wide. I might end up getting lucky on a profit trap today. If we can get over 6,400, I've got a pin at 6405 and a pin at 6450. We might get lucky. Again, 6490, 6500 is my engineered options, but I put in some end of months to go along with it using that like Trump low. And the fills weren't terrible. $1.50. So I'm risking, I think I'm risking 350 to make $1.50, but I also went 20 wide on the profit trap. So it could be okay. We'll see. And it's just going to be another zero DT. We've got a plus or minus 66.73. I've got the expected move box adjusted right here. So 66.73. This will open up this morning. We're looking at a pretty healthy gap to the upside. We'll just I will probably do. I don't know. I don't know why I didn't use the puts yesterday. Either way, it worked out. But like I said, lucky towards the end. That was not like an easy day to manage it because I just watched this thing drifting lower, 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 lower. Hit my chart alarms. I was like, son of a gun. And it was at 17. 30 to 35 was my level, and I was taking on some heat there. So the defense was kicking in a little bit. If you remember, we did a 6,300 pin price on a butterfly defense yesterday, 25 wide. Now at 3:30 in the afternoon, that was up like over $1,000. That was up over $1,000. I am streaming at 1080. This is 1080. When I'm on my laptop upstairs, I do 720 just for bandwidth, and it's on Wi-Fi, but I'm wired in. I'm pushing 1080 here. Are there any individual stocks you'd like to buy and hold for 6 to 12 months? No, not right now. Okay. Look, let me log in here. Right now, this tells me that there's not really a good place to be, owning. If you're trading is different. Owning, investing, holding, right now, this is literally cash, no stocks, and a little bit of gold. This portfolio is a 60-30-10. 60 in equities, 30 in gold, 10 in Bitcoin. There is zero Bitcoin, zero stocks. The position in gold's been trimmed back, and you're looking at mostly sitting on the sidelines in cash. Okay. Sorry, Mark. It's 1080, dude. Check your YouTube settings. Check your settings wheel if it's like automatically based on your Wi-Fi or bandwidth, but I'm pushing 1080. Okay, let me get some comments here. Gas, 100 point up or down. Okay. Thinkorswim have funky numbers in the max loss. Okay, Raj says I was panicked, terrified the last hour. Panic, loss. Okay. I mean, yeah, it happens. I get it. That's why the trade up front. That's why I play defense. I can stick in there a little bit longer with a little bit of defense. I know it wasn't going to be easy. It's never fun to have defense where my positions are down over $2,000. My defense is up a couple, $1,000 to $1,300. It's like, do I take this profit? Do I wash some of that risk? I mean, if I looked at yesterday and I was down, let's say $2,000, but my defense was up $1,300. Even if I wash that risk, that's still a loss on the day if I took that loss. But rather than taking a $2,500 loss, if I was dead wrong, I reduce it to $700. I can make that up in a couple days. But like I said, I got lucky at the turning point. We got above our strikes. I closed out at the ends, and we hung in there. Okay, we'll see. Yeah, we'll see what those profit trap looks like. Looks like we had some good trades on waterfall yesterday. So anyway, point is for Moses' question on buying and holding. No, if anything that I'm assigned, anything I own, I'm trying to just repair it and get out of it and keep cash. I want cash. I want yield. BILSGOV. I want like a 3.5 to 4% mix on unallocated cash. One trade I'm also looking to do is if I raise some cash, I've got positions here on. Let's take a look at Project Options Edge. I posted this last night. This was late last night. Benji, you're so loud. Where are you? There it is. Okay. So these trades here. FCX, I've got naked puts. MO Ultra, I've got naked puts. Tesla, I have a great, two awesome setups on Tesla. One of them, I bought the shares and I put in a modified collar trade where I bought out of the money puts and I sold a 470 covered call. It was essentially at the money. That thing is up like 90+% of my max credit. I also have a modified 1111 where I put in $1,000 profit trap. Max profits around $1,300. It's up like $1,100. Taking some profit off that, lowering my cost basis. I still have shares of Tesla. I'm hanging on to it, but I'm staying way out of the way. My exposure on Tesla is like $200. Okay. USO, XOM, XOP, CVX, all the oil plays. I mean, I can't look at those charts and say I'm going to hang on to these. They've all ripped a lot. Yes, they can still go higher, but I want to get out of these trades. I think that they're looking better. So XOP looking at a little bit of a move higher. So anyway, I'll be looking to raise some cash with some of these closed positions. A lot of these are Project Options Edge trades, ratio spreads, naked puts, stuff like that. This should free up a decent amount of buying power. Not a ton, but for me, if it's I've got 3 or 4 naked puts on FCX, 3 or 4 naked puts on MO, naked puts on Tesla. It's like that's got to free up maybe $5,000 per account, maybe more. And I'd like to have that profit. These are all profitable positions, and that would free up a decent amount of capital to get some of that naked put exposure off, and also reduce my beta weighted delta on my overall portfolio, which is not a bad thing. And if the market's up today, then we have a chance to freaking do it. without feeling like we're dumping stuff as it's all selling. Okay. All right. What does NVIDIA look like? Not good, right? I measured this move out. Let me get a different workspace here. This was a for me only workspace. Expect to move. I already did that one. Let's go to my cleaner and fresher. There we go. So I'll move this. Take a look at NVIDIA. So NVIDIA, this yellow box down here is correction symmetry. So if we go high to low, lower high to lower low, so I'm using these highs as well as this high to project this box down here. So correction symmetry on NVIDIA having a three-wave correction. So if this is 1, 2, 3, that puts us down to about 150 bucks. Okay. I canceled. If you looked at that bonus trade with me, that bonus trade around the 170 handle, it still has not filled. I canceled that 170. Let me show you. I will update this. This is a bonus trade. It wasn't a service trade. I canceled. We looked at the 170 by 165 by 155. I canceled that trade. It was trading for like $1.40, $1.50 yesterday. I put it in for $2. I just canceled it because I don't think that 165 is safe. So I'm keeping the 154 by 148. I'm keeping this for $1. I might actually ask for more out of this. This is what's the setup here? So I'm risking 3. So I went $6 profit trap, asking for $1, risking 3 to make 1. Okay. I'll keep that there for a buck. It's trading for 53 cents. But one measure move around 150. That's why I'm going to keep the trade. You know, my break even on that broken wing butterfly would be 148 plus there's a profit trap. So that break even is down to like 142. 142, I mean, we'd be getting into this, you know, this cluster. If there's any bounce off of 153, there's any bounce off of correction symmetry, then we might have a high, low, lower high, lower low, lower high, lower low. And so if we get this trade, get it to fill, we can hopefully get a bounce right there to get us filled. Either, you know, we keep the dollar credit, maybe it's timing wise in a profit trap zone. We'll see. But I canceled the 170 because I think that now that we've broken this 170 support, I think there's more follow through to finish this symmetry correction. Okay. Nice work. Eric said did bear call spreads all day yesterday. Good stuff. PGR. Yeah, I'm in PGR for a little bit of a ratio spread. And it's way down here. So as long as PGR stays above 150, we have a pretty solid. This is a yearly moving average. So this is a 5-period yearly moving average, which I also like to look at on any time frame. Pretty strong support, you know, going all the way back into, I mean, 2008 essentially. But all the major dips we've seen, there's the COVID dip, there's the 2022 and the 2023 low. Through the bear market in 2022, this stock somehow didn't really get hit. It was making higher highs and higher lows, which is interesting. You know, we've had a decent correction. I'm using the 2023 low for my kind of line in the sand. PGR is already down about 32%. I'm just kind of hanging in there. So that's my exposure. I mean, so many of my trades are just out of the way. Okay. I keep going back to this. Right now, there are smart risk management overlays that are saying stock ownership is not good. Okay. I am trading through this stuff, but I'm not looking to add ownership or tie up a bunch of capital. I'm trading. I trade for today, I get my money back, right? I get my buying power back. I trade for the week, I get my money back. I'm not trying to hold stuff forever. Very few stocks would I say I want to own right now. If you're in the energy space, great. It's the sector that's crushing it right now. But everything else is questionable. Okay. All right. So we'll see what happens today. Market's gapping up. Great. You know, it feels like a little bit of relief. Does it get faded, you know, all day, or is it going to be like it's up today and then it gets faded? We'll see, man. You know, I mean, the market has room to run a little bit. We've got a 1.16% move to the upside already. Gap adjusted. Here's the gap high. This is box 2. 64.83 on my call side. Okay. And hopefully we don't take out the lows from yesterday. So we gapped way the heck up here. So I'd look at like 63. I look at yesterday's low, maybe. We have another gap up. So let's look at a 63.15 and a 64.83. So knowing that we have that big pin price at 64.75, this market might go after it today. I'm going to try to get some sells up here towards like the 6,500 or higher and try to get some puts in around the 63.20 zone. Let me look and see what it's offering right now for SPX. SPX end of the quarter. Plus minus is going to be, I mean, I've got all sorts of crap in here already, so this might be a little tougher. What is that working order? It's weird. Okay, so this is the current price. If pricing stay above 64.05, great. All right, call side. I definitely get some calls in. What the hell is this like floating 6,500? I don't see that attached to anything. That's strange. All right, anyway. 65s. So 6,500 right now is an 11 delta. I'm going to go 10 delta, 10 wide. So bear call spreads. See if we can get filled for 10 wide there and then 63.20. So we should probably get a buck. Yeah, I'm gonna get $1 for this. Let's see if we can get $1. $10, $15 credit. I'm going 10 wide, 65.05 plus, it's a 10 wide spread, 65.05, 10 wide spread, and 63.15, 10 wide spread. I'm gonna try to get over $1 on this trade. So let me go after $1.10. As long as I get $1, I'll still take the trade. Come on, $1.10's not filling. Let's try $1.05. It's 65.05 on the call, 63.15 on the put, $1.05 not filling. Come on, man. I might take this at $1 and then add another trade for slightly higher credit. Give me $1, you turds. All right, I'm gonna let this hang out for $1. I should ask for more. Give me $1.05. At least let me cover this the commissions and stuff. All right, so trades pending for daily profit play 65.05, 10 wide. That's the call side. 63.15 put side, 10 wide. If I want to go 15, I can probably get what I want. So 65.05, 15 wide. Let's see what fills here. Let's go 15 wide and 63.15, 15 wide. All right. If I take this trade for $1.30, $1.40, this one should be pretty safe. Let's go $1.35 credit. If this fills, I'll cancel the 10 wide. All right. So I'm canceling the 10 wide. I just went 15 wide. Same strikes, though. Same strikes. So filled. That is 65.05. $63.15. So I got filled for $1.40. That's not a bad fill. Still taking on some risk. I'm going to play some defense, but filled for $1.40 credit. Okay, you got filled on that, Catherine. $1.05 and 10 wide. Good. Not bad. Okay, where are we at? We're at 64.20. Okay. And expect to move gap high 64.83 with gap adjusted. And I'm selling at 65.05. Let me put a green line up here. 65.05 is hopefully safe and sound. And the bottom was a 63.15. flips. Okay, so as long as we have price in between these green lines, we're looking okay on the day. I still want to play some defense since it went 15 wide. Is the market going to use this and just fade it right back down? It's like this would be, again, like a clear tell of what the market's going to do. Like every rally is being faded, everything is being deleveraged. If that's behavior today, then this is not a good environment. This is a trader's environment. You can still survive this crap as a trader. The house edge is still 54 to 56% daily, but my gosh, this stuff will drive you crazy when it's like there's just no bulls here. But I don't know. The day just started. We're gapping up. We actually flipped over to positive gamma above 6,400. I do have some profit traps I want to keep a close eye on. Here is my daily profit play right here. Okay. My end of the month butterfly is $1.50. It's showing mostly profit, but I'm going to hang in there and see if I can get a 20 wide profit trap. Same thing here at 64.50. This one's down, but if we rally up here, I'll be looking to close out some profit. Engineering options, I know we have to get to like 64.90 to 6,500 on the day, which is way up there. That's a big bullish rally if we get it. Are we going to see the VIX drop today to support that type of upside rally? I don't know. Keep an eye on the VIX, which right now has retreated a little bit from about 31, almost 32 down to 28. Is this the first real VIX relief we've seen in a minute? This was the Monday Trump tweet that got faded all week. So S&P was up and got faded all week and closed below that on Friday. And you can see the VIX was the opposite, right? Huge drop in the VIX and it just rallied all week. I mean, it's almost scary how correlated that is, and that's what we typically see. Okay. So we will see if this is going to drop. I mean, more pressure to the downside on the VIX does give more thrust to the S&P. If it is just a sticky, calm VIX day, we might just see the market gap up and all the pressure and all the pump has been put in already. But we're up over 1%. Certainly doesn't suck. Little P&L in the day doesn't suck, that's for sure. But we'll see if we're safe on daily profit play. I'll keep an eye on my broken wing butterflies. This one has a chance. We're hanging out at 64.14. If we hang out and have like a little to no movement on the day, this is a 20 wide profit trap that I still get some extra bonus bucks here, which is not terrible. So we'll see. So what is the risk on this trade? I went 20 wide by 30 wide. I mean, I'm taking on a bit of heat here. We'll see. I mean, I need price to really stay above 64. It's got to be above 63.85 for the day. So let me put in a profit trap drawing. So 63.85 to 64.05. 63.85 to 64.05 is profit trap material. So if we're above this, there's no risk. If we're in it near the end of the day, this is a profit trap. If we're pushing higher in the day, we're above 6,400. That's positive gamma. This market, may use it. But that's a large gap that I would imagine does get filled at some point, even if we push to the upside move could still get us like a 6,700 to 6,800 push. I mean, the market's down. And I mentioned this on Monday. We are now on the clock for a 30-day calendar to see in the next, 20 trading days or so, the next month of trading, are we going to be able to reclaim the 200-day moving average? Because right now, based on the structure, I know my chart's a little bit messy with all the crap I have on it, but if we can get back to this level, that's the first line of defense for the Bears. Nice little rally for the Bulls, but the Bears would say, okay, that's cute. Good work. Back you go, right? Back to the downside. That's if we get that just easy rejection off the 200-day moving average. Could we rally up to where this thing broke out? Sure. That was the big support level around 6,800. There's your lows here at 6,500 to 6,550. To me, first line of defense that the Bears will reject. Second line of defense, the Bears will reject. I wouldn't mind being a seller at these highs if we have, this level getting tested, trying to either one, get a turning point more near term, or like we're doing a lot on the day is just selling bear call spreads. Okay. Benji, good Lord, shut your mouth. Even I can hear him through these headphones. How good does this sound on audio? Any broken wings? Yeah, I'll take a look. I mean, for $1.40, I've got a little bit of wiggle room on those defense trades. Okay, let me as long as they can get a small debit. Let me see what is like a 5 cent debit. I don't mind taking those defense trades. So on the call side, so that's my daily profit play. Right now it's trading for a 7 delta. I'm going to go, let's see what the 85, 15 wide, 30 wide looks like for defense. It cost me about 10 cents right now. So if we get up towards those highs, it's not expensive. It's a debit. There's still some risk on the trade. Let's see. It should be cheaper if I did it this way. If I went, let's go 95 by 10. So that's 15 wide. That's still 20 cents. I mean, if I'm going to get a profit trap, I might as well make it worth it. Let's see. Maybe it might be cheaper just to do a butterfly spread, but I doubt it, man. VIX is high enough. Let's see. If I need to defend 6,500, 25 and 25, what's this cost me? Yeah, this 25 defense, that cost me over $2 right now. No way, I'm not paying that. So probably broken wing structure. I kind of like this 64.85 to 6,500. So that's 15 wide. There's 25 wide. Okay. This one, so I got a $15 profit trap. Break even would be 65.15. I'm going to take this trade for a 5-cent debit. I'd be willing to pay up to 10, 15 cents for it is fine. I'm working with a $1.40 credit. So let me see if I can get this thing for 10 cents debit. $0.10 debit not filling. I mean, what's funny is I have plenty of defense sitting up here with these profit traps. As long as we stay above 64.05, this is potentially a $2,000 profit trap in addition to $150. So I think, I mean, this would be my defense trade. I'll let it sit for 10 cents. I'll put in a top defense right now in daily profit play. Top defense, SPX 331 expiration, 6485. Okay, hopefully we don't have to pay much for that. I just got filled on it for 10 cents, so that's no longer pending. It's filled. So 10-cent debit is filled. So now I have some defense up to that 6,500 handle. Okay, let's take a look at the put side. This is my put side. If I look at a broken wing, I mean, I'd like to say that price is not going to freaking fade all day, but who knows, man? This just seems like the market loves this, and if it just works its way down all day, it just can't get to that big gamma level. That JP Morgan collar 64.75. I do think that it's a big level today. I wouldn't be shocked to see it get there. I really wouldn't. Like the market just kind of pumps up here, has this 1-day relief rally. The zero DT stuff is alive and well, but hopefully not enough to get us back to. I mean, I want price to stay less than 65.05. That's my call side. Okay, so there's a pretty big move here. We've already got a strong gap to the upside. Let's see what kind of zero DT defense the market's willing to throw at us. Let me see if I can get a. So on the put side, if I go broken wing butterfly, I want credit, and I need to defend like 63.15. So I'm not going to go super aggressive on this. But if I went 20 by 10, could I get a credit on this one? I mean, small credit, yes. 20 cents credit for a 10 wide. Let's see. So I can go 10 wide and get a little bit more credit. If I go 15 wide, it's a debit trade now. So I don't mind taking this, get an extra 25, 30 cents. This should be a safe put spread for the day. I would hope. I mean, if we take out those lows from yesterday after being up over 1%, this market sucks hard. Like that'd be a terrible reversal. So I'm gonna look at this one as a way to just inject another 20 to 30 cents in my account. That could be it's defense for 10 wide. It's not a huge defense trade, but let me go. Let's see if we can get 25 to 30 cents in this. Okay, 25 cents, 30 cents. Let's see if we get filled. All right, I'm in for 25 cents defense in the bottom. So that's a 63.20, 63.10, and 62.85. 25 cents credit filled. So potentially a 10 wide profit trap. It helps me defend the 15 wide, which right now is trading at like a 6 delta. So I mean, there's a 94% chance it stays out of the money, which is I take those odds. Okay. Second day. So put box. Yeah, I'm using the lows from yesterday. So I'm going up a little bit to collect some premium. Since we have a pretty strong gap to the upside, I'm looking at, okay, we have a close from yesterday to fill the gap. We have lows yesterday around 63.17. I'm starting my level at 63.15. So yes, if you wanted to go out of the way, then I get it. Like throw it down here at 62.75. Okay. But I'm basically using the low. So I'm not using the expected move. I'm going a little bit higher. Again, I thought about this, like my process as far as the trades. It's like I look at the expected move gap. We have a huge gap to the upside. So this is the number I'm really paying attention to because this gap adjusted should hopefully be safe on the upside. I definitely want to stay on the upside as far as my call spread goes. I want to stay above the 64.83. On the put side, because of this gap, and we're back into positive gamma for the day above 6,400, as long as we stay in positive gamma, I could go to a similar delta as opposed to my, expected move box, which is 62.77. That delta is so far down there. That is a, 2 to 3 delta. I can still get some premium for it, but not a lot. So I'm just using the low from yesterday. Okay, good Rick. Still got filled at $1.40. Nice. Okay. Why is this? Oh, you don't hear Benji? Okay, good. That's good. Well, then I'm proud of my microphone for I mean, he's literally like a foot away from the microphone, but I can hear him through my headphones. All right, nice. Mark says 15 wide, $1.45. Good. Where are we at? Price is still pushing higher. Okay. So let's hang in there. This market might be, pushing hard, trying to squeeze. Here's some gamma. I'm telling you, man, like there might be some risk to the upside today. We have I don't know, this is gonna be an interesting day. I certainly don't want to take losses on a daily profit play, but we've got engineered options. If we get above 64.90, 6,500 today, we have some profit traps sitting there. If I'm above 64.05 or 64.50, those are winners. Like we could have an interesting stack of trades. And like I said yesterday, did everyone engineered options? Did you see my video? If the market for the month is one big fat red candle with no wick to the downside, that means there's been little to no defense. I know this chart's ugly. Okay. But this is the body of the candle. This is the low of the candle. Right now, at least there's a little bit of defense. Okay. If we can keep pushing up today and reduce the size of this candle, there's some defense. But yesterday, this was literally all red with little to no. I mean, the market had a low of 63.17 and it closed at 43 yesterday. So a little bit of bounce off the low, but that's a tiny, tiny wick compared to today because of that big gap to the upside. So look, I say we enjoy it. Hopefully we're not going to get, blown out to the upside. That'd be really frustrating. knowing that the VIX is at 27.56. I mean, let's look at some numbers here. So we're at 27.56 VIX. So made a 1.72% move. We're already up 1.5 from yesterday's close. Should the market go on top of that another 1.7? I mean, it can. It doesn't happen very often, but it can. So let me see where my opening price is at. Opening price is this sliver green candle. That is, I mean, my strike is 1.37% on top of the gap higher. I'm hoping that's enough. Okay. I mean, delta wise, again, it's a single digit delta. Hopefully the probability of profit stays safe. But this is going to be a big tell for the day. How does price react if we come up to 64.75? We fill this gap. We find that JP Morgan collar trade. Do we pin here for the day? Okay. This would be a Q1 victory for market makers. If we hang out at 64.75 and it is there within a couple of points for the day, that's a big win for market makers. Because this thing got blown through in the last 2 days and we came back and salvaged it. Okay. This started January 1, by the way, or the first official trading day of the year. It's like, this is a 10-15 delta from JP Morgan. It's on there every quarter. But after today, this all goes away. So new quarterly collar trade, new flows. This, 0 DT positive gamma today maybe disappears tomorrow. I don't know. Okay, we'll keep an eye on it. I'm going to set a chart alarm. We got some of these in the way. Let's go 64.75 on the nose. 64.75. Okay, let's see if we take out the lows from today around 64.08. I don't want it to. I just want to hopefully rack in some, scalping defense. So that somebody was asking me, how did I put in that trade at 64.05? I mean, honestly, I look at this and I don't know why I chose 64.05. I think I chose it. I guess that makes sense. I think that I chose 64.05 with this cluster of lows. And this was we had a lot of support here. We broke below it, then ripped up on that Monday. I mean, again, in hindsight, I should have chosen the 63.50. But I thought once we gapped lower, this felt like a bit of a flush and we kind of held around that 6,400 handle. This is probably when I put the trade in. Would have been on, the 27th. Whatever. That was a Friday. And we got filled. So I don't know. It's all a blur at this point. But hopefully, for the day, price is below the screen line, above the screen line. I might play a slightly wider profit trap on the call side. I think this market may find a bit of a squeeze. My defense trade is 65.15, 65.05. That's where I need to watch. Here's going to be my top defense. This is my bottom defense. So top D. So daily profit play, bottom defense, and top defense. Some end of month stuff is we're above 64.05. Right now, this profit trap's already starting to kick in a little bit, which I mean isn't bad. I pulled in $1.50. I'm showing $210. I pulled in $1.50. It's showing $1.80. It's like I don't mind just taking the profit off of these. I mean, it's showing more profit than what I took into the trade. So I put it in for $1.50. It's showing $200. Put in $1.50. Showing $200. Like if I just close this for an extra 50 cents, I don't mind taking the profit right now. Okay. Would I kick myself if we close around 64.50 today? Yes, because that's a $2,000 profit trap. Would I kick myself for 60? I mean, yes, I would kick myself. Okay. But I think I'm going to let these run. 64.50. I think I'm going to do this. I'll close the 64.50 right now, but I'll keep the 64.05 as a potential profit trap here. So this one, 64.50. I'm going to close this one down for a winner. See if we can go. Let's try to get an extra, give me some credit here. Can we extra 20 cents? Give me like an extra 25 cents credit. So that's my pin price at 50. Trying to get out of this thing for any bonus credit would be better than nothing. That's still making me 150 bucks on the trade. 15 cents. Come on, man. Don't make me beg for it. 10 cents. 5 cents? Just get me out of the trade or the bonus credit. Oh man. It is slippery. So that bonus credit's not a fill. I'm showing like $200 on it right here. 150 is my credit. I'm up 140. I mean, I could I close it out at a small debit? 5 cents debit, take the winner. All right, these prices are just a little fluctuating, a little high. Bid ask is a little bit wide. 10 cents debit not filling. All right, fudge it. Never mind. Cancel it. Let's let it ride a little bit longer. Okay, this one's looking pretty good, but again, as a $2,000 profit trap is offered up in this one, I'm going to hang in there a little bit longer. Up. Somebody's asking about the bias on DXY. I bet we have a stronger dollar because that was such a crowded short last year that I think the dollar just gets a bid. Especially if there's risk off in the market, dollar's going to get a bid. We could have, oil sticky, equities down, dollar up. Gold is probably going to find its footing. Silver's probably going to find its footing, but they've had massive corrections, which is great. If you like the fact that we didn't have to buy the all-time highs, you've had a 25 to 30% correction in gold. You had almost a 50% correction in silver. Enjoy that gift because now technically you can kind of start from a nice little clean slate and start participating in gold and silver again. I think the dollar index catches a bid. Watch that level from 100 to 101. If we break above that, the dollar has room to go up to like 102 to 104. Expected box, Randy, was 66.73 pre-market. Okay. So we're trading at 46 right now. All right. Let's see what happens. Engineered options. Pay attention to your P&L today. I know we have a lot of positions open, but 64.90, 6,500. Those are pin prices. That could be good. That could be really good, actually. But we've got to have quite the squeeze. So what else can we look at today? Maybe I might put another defense trade in here at these highs if I can squeeze it in. So March 31st, I'm going to go 10 by 25 by 45. That's pretty cheap. So that gives me a break even around 65.40 for another 5 or 10 cents. Again, I guess I don't need to put that on because I have a defense trade already sitting there with our engineered options. So I don't need to stack that. All right, I'll pass on that. So I've got daily profit play in, top and bottom defense. I've got pretty wide ranges. We're above the expected box high. We're at yesterday's low. And we'll see if this market is going to get some 0DT love, which is just trying to grind higher. I'm telling you, 64.75 is a key level today. It is weird to have it that we have this massive, it's a put wall at 64.75. But if the market gets it and we hang in there for the day, that is market makers doing their job. Could it go higher? Sure, maybe. Okay. But if it gets there, I'm sure there's all sorts of like unraveling, unwinding, deleveraging going on in the background. And I don't know what the result is for today for daily or for engineered options, but if we have another thrust for the end of the month, end of the quarter, and this thing saves us again, like this is why we'd play defense. And it could get even better and juicier because we have those broken butterflies with those $1,000 profit traps. And so near the end of the day, this could be a very wild and crazy day for our benefit. Do I like Nike earnings? I already have ratio spreads and naked puts on that, Don. So I'm probably not going to do much with Nike. other than just hang in there. Um, Nike's been down. I've got the 45 and $40 puts on Nike. I mean, I think it's a fair price. This is what I put in for Nike. So I bought a put. I did a ratio spread 55 by 50 and then added another put at 47.50. That was last year's expiration. I got a trade on right now for Nike. Let me check here. So Project Options Edge, 50 by 45. That's a ratio spread with a 40 put. That's naked. I pulled in $2.35. It's down, but as long as price can stay above basically $45. So that's my exposure. I don't think Nike's going to be a huge mover in earnings. I mean, we're looking at like a almost $4 move. That's not exciting to play earnings unless you want to look at like a calendar spread. If we have like lackluster earnings, or I should say lackluster movement, a calendar spread could be very cheap. So if you go, let's say we've got earnings aftermarket today. If there's no crazy reaction to earnings, let me look at a calendar spread. So if I were to, I'd almost feel better doing like a broke wing butterfly with the expected move. 384, something like this, dollar spread by 2. Yeah, it's just not offering enough credit. Yeah, I don't like that structure. I mean, I might go a little bit wider, I guess. Still not a lot of credit. Get a dollar profit trap at the expected move, maybe something like this, and then see if we go 5 wide. I mean, yeah, I'm not excited about making 30 cents on Nike, so that's a no. If I want to do a calendar spread, I could buy the 52. I'm sorry. No, it'd be sell the 52 for this Friday and buy next Friday. What's that going to cost me? So why is it 8 days out? Oh, we don't have the market to open on Friday. So that would be, when's the 2nd? That's Thursday. Thursday to the next Friday. Let me see what that calendar spread looks like. So 29 cents. And as long as price stayed within, well, we just have high volatility. It's not a good trade. Calendar spreads with high volatility is not a great trade. You're getting more bang for your buck on a calendar spread when you have swelling volatility. Yeah, I don't know. I'd probably stay out of it. It's cheap. Max risk of 30 cents. Let's just put it in. Let's build it out. So option strat. Let me look at Nike for a second. So I'll build out a calendar spread. There should not be assignment risk if I took this trade. It'd be like 30 cents max risk. But it could possibly be like a 100% gain or better. So if I did a calendar spread, so I would sell the 52 on Thursday, and I'd buy the, oh, this is way off. This expiration would be the 10th. Yeah. So I mean, for basically 30 cents, if volatility doesn't go anywhere, this trade does offer some pretty good profit. But that expiration, going all the way out to the 10th, I don't know if you're going to get this max right away. Probably not. Right? This would be expiring on Thursday. So if we could stay within a $3 move, like $3.80, there's some pretty good profit opportunity there. Max risk is 30 cents. It's not that bad. Let me see it. Does Nike move a lot on earnings? Let's go weekly chart. Plus, we have a holiday on Friday, so the markets are not open. Earnings. And it moves a little bit. Earnings here. I mean, that was a big move in earnings. That's, yeah. I don't know. I think earnings prices are going to be a bit more sensitive right now, just because that's like the only good thing the market might have is if we have positive earnings, the markets might love it. I don't know. I just think we're going to get a lot of wild swings. So I'm gonna button up a little bit, not force trades. I've got enough running already. We've got plenty of zero DTs. We've got plenty of weeklies going. Waterfall income, engineered options. We're freaking active, man. I'm just gonna hold off right now. Yeah. So I mean, as a stock though, I do like the stock. I am putting in that $45 and $40 naked put. I don't mind owning it. Fair value is like $70 to $80. So Snowflake's okay. Dividend, I mean, I wasn't buying Nike for dividend. Profit margin is lower than last year. It's still positive. Price to earnings, I mean, that's fairly expensive for retail, but oh, this is different. Shh, that's not what it was. This has all been adjusted. Interesting. So it shows fair market values at $40. Well, I might find myself owning some Nike at $40. Um, I mean, $40 I'd be happy with. I think there's upside potential, but man, this stock is not getting a lot of love here. It's already down 71%. So, I think it's due for a little bit of a tranche here, kind of trough out, but maybe $50 holds. I don't, like I said, I go back to this. I don't see a lot of conviction in owning anything. I think right now the world doesn't know what to hold for the next 2 to 3 years or 5 years. Is anybody confident what the stock market is going to look like in 5 years, individual stock wise? Indexes probably fine, right? Indexes we'll figure it out. We got positive drift, we got upside momentum, blah 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 blah. They need a cleanse. They're getting a cleanse, but individual stocks, I don't think you can be a stock holder with any real conviction. I think there's too much disruption. There's too much uncertainty. You'll have these boom and busts that if you've got a big profit chunk, trail it and get out. I think it's hard to build a portfolio and say, like, I'm going to own this, unless you're talking more boring stuff like blue chips, utilities, where you're getting a dividend and there's very little price action, low beta. Otherwise, there's not a lot that I want to own. Okay. So this is the 6405 20 wide. I've got that 6450 20 wide. So we'll go 50 to 30. Another profit trap. And then up here, we've got a profit trap around 64.90 to 65.10. Okay. So if price near the end of the day is just hanging out in these boxes, especially in usually I put these at the pin price. I just want to see if it's at the high. So this is let me go horizontal line. So that's a pin price. And that's a pin price. All right. What do I not want to see today? I do not want to see this market take out the lows. That'd be a terrible day. Could I play defense? Sure. But it would just kind of show us what this market is truly doing. It doesn't care about anything positive. A gap up is an opportunity to sell the rally. So just keep an eye on that. If we go open here, rally up, pull back, and we bounce, maybe we have this market hanging out here today. I do have a couple profit traps I can keep an eye out for. Maybe we do not get to 64.75, which is that big JP Morgan collar trade. Maybe our engineered options defense trades aren't good enough. We got filled. By the way, those defense trades were stacked in with a 100+% ATR, and we exceeded it for the month. Like, our trade was filled at that 100% ATR. It still got exceeded. So that was an ugly, ugly March. Even with this little comeback trade for today, it's still not enough. But we stick to the game plan. Old ETF. I mean, ETFs are fine. ETFs are fine. I mean, they're going to go down, right? Like, you're going to get some corrections. I think interesting concept for right now is, let me ask this question. Who thinks, okay, usually it's the, the dog wags the tail, right? Usually the consumer recession pulls stocks down. Okay. This time around, the stock market, with the wealth effect, if it falls enough, may put us officially into a recession. Usually it's not. There's other stuff going on for it to drag the stock market lower. This time around, it might be because the stock market is at those crazy all-time highs, is at these high valuations. That if the stock market sells off, that wealth effect, the consumers pull back in a big way across the board. highest demographics to lowest demographics, everyone in every part of the K just pulls back on spending. That's not good for the GDP of the U.S. We've literally created 0 jobs in the last year. You hear about this no fire, what is it? No hire, no fire environment. That's not really true. It is a no hire and fire environment. Our job creations have been absolute garbage for the last year. So this is my biggest concern about 2026 is that if the market gets ugly enough and we do cross that 10% threshold, I think 10 becomes 15, 10 becomes 15, 15 becomes 20. I think it can get really nasty. However, it's still not easy being a bear. Okay? Why? Because we have Trump, because we have a noisy administration, because we jawbone the crap out of everything, because there's liquidity measures, because we could backstop things. It's still not easy to be a bear. But if the market can hang in there, we can keep this correction at bay. I mean, I think the market right now putting in about a 9 to 10% correction from high to low. I think the market can rally back up, cut that in half, then we have another leg lower. I do not want to be fully exposed to another leg lower. I want to trim a lot of exposure if I can. Okay. But this could be where, as they say, it's different this time. It could be. It could be different in this way that there's so much riding on the stock market at these all-time highs. There's so much riding on everyone's retirement being excited that, hey, look, my portfolio's gone up for the last, 15 years by the grace of God and by the stock market all-time highs and this manipulation we've been seeing. But if liquidity is changing, okay, let me see if I can remember this. The growth cycles we have: growth, liquidity, monetary policy, fiscal policy. I would lump earnings into there. I'm missing two P. There's 6 cycles to the market, and it depends on what kind of. There's basically 6 cylinders to the real or the equities market. Growth, liquidity, monetary policy, fiscal policy. I can't think of what I'm missing. There's 2 that I'm missing. I think positioning is one. Anyway, I'll find out. But right now, growth stalled. Liquidity going down. Monetary policy uncertain. Powell is not doing anything to step in and backstop this stuff. Warsh, nobody knows what he's going to do, right? If oil's at $100 and Warsh comes in to bring, as Fed chair, his job is not going to be easy. Fiscal policy, it is spend. But if we have, slowing growth, multiple compressions in earnings, liquidity is drying up or liquidity is shrinking, it's going to be tough. Look at HYG, look at LQD. These are not good. So the strain is already apparent. It doesn't take much to push this into, deeper negative territory. So this is where we're trying to avoid the volatility drag. That's the key to 2026 is not being stuck on the wrong side. Okay. Is the holiday, even though it's NFP. Is it NFP? So we're going to have a job print on Friday with no markets open? I don't think it is. It an NFP? I feel like they push it because of the holiday. Huh. So markets are closed. We're still going to have an NFP print. Interesting. Yeah, I mean, markets are closed. Forex is open, but it's going to be slow. I don't know. I guess it's a perfect time to sneak it in there because nobody's going to care when the markets are closed, but it'll react next week. Post this news, whether it's good or bad, the market might react to it next week. So, by the way, Friday morning, because the markets are closed, obviously there's no prep for daily profit play, but I don't mind coming and doing kind of a, strategy talk, anatomy of a trade, ask me anything type session on Friday. So we can still be live on Friday if you want to join me. It would be nice to, focus on some subject matter, get some more trust content, ask a lot of questions. I think that'd be a good session for Friday. Okay. All right. Any thoughts? Any questions for today so far? I need price to stay below 65.05 and above 63.15. So far, so good. I don't know what the day is going to give us. I'm keeping eyes on my 64.75. I'm keeping eyes on my profit traps, which are here in these these boxes. Let the day be the day. Above 6,400, greater than 6,400 is positive gamma. So that's positive gamma, 0 DTE flows. Let me see if this is changing the profile out more than just today. So there, okay, with that giant put wall at 64.75, which again may be tested today, but if that's tested, I think that would likely be a rejection as well, or just lingers there. We'll see. Let's go Gex profile. Let me see if this is changing the the rest of the week, because so we're trading through Wednesday, Thursday, right? So 0 DT flows today. 64.35 live, big put wall at 64.75. I mean, there's nothing here. That's like the biggest sticky spot on the chart. So I don't know. I'm kind of hopeful that the market just get there. That seems like a big enough level. If the market wants to gravitate towards it like a magnet, test it. Market makers do exactly their job, like right to the pin price. They could be an interesting pin. I mean, one potential trade, it could be a low risk, high reward trade. Double up service. If you like a 10 wide or 15 wide, it's going to be a debit, but let me take a look at that. It'd be a standard butterfly trade. So if I went to SPX, I might do it on XSP actually. We'll see if that pin price is comparable. XSP would be a 675, or I'm sorry, a 647. 647 to 648 pin, maybe going like 3 to 4 wide on XSP. We might get lucky on a pin price there. But let me see. So 64.75, I'm already scattered into a bunch of trades, so I can't throw it on SPX, but let me build it out. If I pinned the 75, 15 wide and 15 wide. So for, a dollar, let's say $1.50, $1.60, you can make up to $1,500. So if we find that put wall and stick to that put wall, that's a pretty low risk trade. If I do it on XSP, let's go XSP since it's going to be same price. It'd be the 647 and change. If I went 647, 3 wide, 3 wide. So it cost me, 75 cents to make up to $3. And that, again, that's got to be perfect. But my break even would be 644.75 or it'd be 649.25. If I go a little bit wider, cost me $1.25 to make 4. I mean, it's okay. Like that's a pretty low risk trade. As long as price is above 644.25 or below 6, I guess it'd be 649.75. So you could build out a little trade in double ups and give yourself a chance if we're going to hit that 647. Again, the put wall is 6475 on SPX. So that would be 647.50 on XSP. So there's your pin. It could be a little bit cheaper if I went 648. It's further out of the money. Go, that's 6 wide. No, 4 wide, sorry. And they're 4 wide. So $1.15. Nice part is because I could do it this way with a call side too. I could just put a butterfly spread in, go 4 wide, call fly. What? It cost me like 30 cents more for a call fly. What the heck? That's annoying. I guess because it's more like that's the end of the day profit trap. Let me go 5 wide so there's an overlap. So $1.60 to make up to I'll put this, I don't know, I'll put this trade in. Anybody want to take this with me for double ups? Max risk is $162. If we're up towards 647 or 648 pinning for the day, this could pay pretty well. I'll take a stab at it. I don't love that it's. I mean, I'm basically getting like at maximum, I'm getting like a 2 to 1. So I don't love it, a 2 to 1, but it's also, not super out of the money. See if I can get this trade for like a buck. Let's go $1.50 maybe, $1.55. Hmm. All right, I'll try it for a dollar. I'll pay up to $1.60 for the trade. So this will be a double up wherever I get filled. Hopefully less than a buck 60. $1.50 is not filling. Try $1.55. That's right at the mid price. Okay, max offer for me is $1.60. That's still a 2 to 1 opportunity. Fudge muffin. All right, I'll put it in pending at $1.50. So $1.50 would be my max risk. That gives me over 2 to 1. So if I could pin this thing 350 over $1.50, that's up to a 200% winner. So it's better than a 1 to 1. It's over 2 to 1, which is not bad. All right, I'm going to put it in for double ups. Harold, let me take a look. Double up. New trade. This is going to be pending because I don't want to overpay for this one. This is XSP 331 expiration. Buy the 643 call. Nope, sorry, put. Sell the 648 put and buy the 53. $1.50 debit. Max risk. And it'd be up to $5 max credit with 648 pin price. 647.50 pin price on SPX equivalent. Looking to trap that area. Okay, trades in, trades pending. Right now it's showing at about $1.70. I'm going to pay. I don't want to pay that. I'm going to pay less. So if it fills for $1.50, great. If it doesn't fill, then there's no trade. So if price falls a little bit lower, maybe this gets cheaper. If price gets closer to our 647, 640, gets more expensive, it probably won't fill. But we'll see. I'll keep it there for $1.50. I'm trying to pin that 647 to 648 today. See if that works out. If you want to take the trade, you can still push the envelope with a $1.70, $1.75 debit. That's going to give you less. So if I push this like $1.75, that's actually it's less than 2 to 1. So yeah, I'm going to stick with that $1.50. I'm going to stick with the $1.50. Good time for crash insurance. Not really. I have crash insurance. I've got SPY hedges, Q hedges, futures hedges. VIX is long. I mean, if anything, should we consider taking some profit on the VIX versus no profit? Gosh, it's like what's interesting about today as the end of the month, end of the quarter, is the big collar trade goes away. The market could possibly reload those hedges. If the VIX is going to like revisit 30 plus, I mean, we are seeing some profit in the VIX. My concern is that if the bottom falls out again, I think 30 to 40 is very doable on the VIX. I think having another VIX event, in a way, a VIX event would probably put in a bottom versus what we're seeing right now. This is a tough market to call the bottom because the VIX has been so controlled between 20 and 30. This is not a VIX event, right? So long the VIX has been a difficult play because I was looking for more like the big, the big volatility event type thing where it goes to like 35, 40, 50. Then we take a big fat profit on the VIX longs. But it's like I don't even feel comfortable selling the VIX. This is how like nervous I am about the overall market. I don't even feel comfortable shorting the VIX at 30. I would short the VIX at 40 because that's what 2022 did multiple times. We had a 20 VIX to 40. You short it, you made some money. back to 40, you short it, you made some money. We never really had a VIX event. We never had a VIX spike to 60, 50, 60, 70 plus. 2022 was a rolling bear market where the VIX just went from 20 to 40, 20 to 40, 20 to 40, 20 to 35. Um, I seriously do not want to short the VIX at 30. I think it's okay, but it'd be a short term trade. You know, I mean, we've tested 30 multiple times, but just saying, man, be careful. This market is, um, it- yes, it can be saved, but part of me is it's I don't know. I mean, I hear like everyone's so bullish. I'm like, really? Because everything that I'm freaking seeing is people are scared to death right now. And I know that the retail crowd is willing to buy the dip, and the retail crowd is not going to be rattled at 10% corrections. They're going to buy the dip and think this market's going to all time highs. I just think the market may not be going to all time highs. So this printed on the 25th. We'll print again tomorrow for AAII. We still have several weeks of pretty high bearishness. We go to fear and greed index. I think Real Investment Advice has a synthetic one that they built. If you go to CNN fear and greed index, are we still in extreme fear? Yes. So I mean, from this side, it's like, are the big bears going to be rewarded? I mean, I think that insiders are dumping stocks. I think you look at some of these positioning tools. I mean, this is really low, right? Like exposure index is really, really low. Was this a bottom in the market, April 16th? Yeah. I mean, the the institutional side got long post Liberation Day. So I mean, there's a pretty healthy correction here that maybe there's some loading back up. I mean, maybe light exposure, maybe market breadth. I mean, we're at 20% right now. We had recent lows around 18. It's like this might still deteriorate. So if market breadth continues to deteriorate a little bit more, it's like I do think there is a short term low that you could participate in for maybe a 30 to 60-day window, but that would be a short term level to de-leverage and de-risk. Okay. I mean, I wouldn't even be opposed to like a 4% box spread that's a 100% guaranteed no risk trade and just take a say 4% at this point until I see that there's, and again, I'm going to trade through it, but I'm saying for like client management, I want to raise cash, take profit, fight the good fight, and be positioned out of the way. But if I could take, for right now, like here's my January. I was up 7% in January. I was down 3% in February. March is pretty much a wash. It's a lot of volatility from my managed accounts. I didn't take a lot of exposure, but I'm still up positive for the year. If I can take this, go out another 12 months, put together 8%, and it's 8% that's already locked in, where it's like I have the other 4% that's going to be guaranteed in a box spread. I don't mind finishing 8% and letting this market do its worst, right? For my clients, if I can get 8% for the year, the market's going to be down 10, 15, 20% at some point, peak to trough. I obviously want to have enough cash to participate on those dips and pullbacks, but I would gladly take a plus 8% if the market's going to be down 15 to 20, and then obviously, buying at better positions. But watching this market breadth. You think the Fed can save us? No, not right now. I don't think Trump or the Fed can save us right now. This war in Iran needs to go away. And I do think that, I mean, we saw it overnight that we're willing to pull out regardless of the Strait is open, the Strait of Hormuz is open or not. Trump is the first line of defense. He is going to be the most vocal part of our markets right now. We're seeing it every single day. It's him. It's Pete Hegseth or Hegseth or whatever the heck his name is. There's a lot of jawboning on the war. We're talking to Iran. To who? Right? I mean, from what I know, we've killed like their top leaders. So who are we talking to? I think it's all a bunch of bullshit. I don't know what's going on, but I do know that oil prices are $100, and this isn't going away. And this is having, look, it's just got the markets on edge. And I would rather not be exposed to the markets on edge breaking key levels to have this be a free fall event that could be at all time highs. You don't know how ugly it gets. So that's what I'm saying. Like, I'll go back to this, and I showed it earlier. There's 80 different risk management tools that is now determined be in cash. Okay. This is a good process. Does it outperform the market? Not really. but it avoids a lot of volatility drag, which is what kills investors by sitting and holding bad positions. When the the VIX is up and the S&P is falling 5, 10, 15, 20%, this does a pretty good job of staying out of it. So, we just fell 10% peak to trough. Do we have a short-term rally? Maybe. But if this stays on the sidelines with cash, I think we're in an interesting regime shift where that growth and liquidity and positioning and monetary fiscal policy, it's just, I think inflation might be the one that I miss for the six measurements. But anyway, I pay attention to this stuff. So they've trimmed everything. Like this was 60% equities, and it was global, not US, global VT, but it's zero. That's a big drop. Okay, it was 30% gold, fully exposed. Now it's a fraction. It's only 7.5% in gold. I like gold. I think I handle gold pretty well because I took profits near the highs, but I also patiently waited for that 200-day moving average to get tested. So I think gold is a good long-term play. But am I super heavy in gold right now? Not really. Just taking some stabs at it, build my allocation back up a few percent. Okay. See, cash at 4.3%, biggest monthly increase since COVID. That still seems low, but I get it. Yep. I mean, Trump is trying. Give him credit for trying. I just think that the try is A for effort, but F for execution. Because last week on Monday, that pump was dealt. I mean, what happened afterwards? That was just like you know this incognito money that was being made right before the announcement happened, and then it faded all week long. Right. So I'm just saying, be careful when that happens because now the Trump bump is not safe. Now the Trump talk is the market's just like, yeah, we get it. Show me price. Oil's up, equities down, pressure, we're breaking the 200-day moving average. We have 30 days. I'm telling you, we have 30 days when the price is below this 200-day moving average. If you want to see a market that's going to stay intact, a bull market that stays intact, you want to see this reclaim the 200-day moving average. Okay. If it does not, we are going to probably be in more sustained fall. So this is let me make this a little bit thicker here. This should be my 200-day. There. There. Okay. So if we come back to it, that's going to be the test for the market, right? We come back to it. Do we get above it, close back below? The bears are back in control. I mean, right now it's like the bears could be like, that's cute. We're going to sell that level, right? Quicker turn, but it's going to be a tall, tall task for the bulls to get back to 7,000 and reclaim it with some pop. So I think that if anything, 66, 67, 68, those levels get faded pretty hard if we're going down for a second leg. So this could be just the first of 3 to 5, right? That type of look in 2026 could be a terrible market. Trump could be jawboning the entire way down, but it may not be enough to save it. So I'm just saying, like the Fed, Trump, all the powers, all the manipulation, all the talking may not stop this market from deleveraging like it did in 2022. Who remembers the peak to trough of 2022? 30 to 40%. This market's down less than 10. So again, I'm not saying I'm a bear, but man, you've got to be ignoring some pretty red flags if you're like, I'm super bullish right now. I'm not. I think there's a lot of things that can help save this market, help manipulate this market, help, add the resiliency to this market, but it's not without doing some structural damage. Again, I don't want to sit here and be glass half empty because I'm not that trader, but we have IPOs coming on Anthropic and SpaceX this year, right? Most likely. That's a lot of capital. I mean, we're talking about SpaceX being valued at and an IPO valued over $1 trillion. That's going to be one of the biggest offerings and openings since was it Saudi Aramco? And there's a lot of money that's going to go into there. So where's that money coming from? Maybe from every profit of Mag 7 goes into like SpaceX. I think you're going to be on borrowed time. I think you've got like a 3 to 6 months window to even participate in those IPOs and then get the heck out of them. So I don't know. I just think that we have some vulnerability ahead. There's clearly some technical structure in the market that's not looking good. We have a 30-day window that if this war lingers and this stays below the 200-day moving average, I don't see how this market just gets resolved. I think this is going to be damage, more deleveraging under the surface, and it just rolls over harder. And it probably pulls back again, then rolls over hard. It's like it could unwind all of this. It could all unwind. It might be orderly, it might be scary, scary organized, but until I see like we're reclaiming the 200-day moving average to rip, I'm just not buying it right now. Not yet. So we'll see. Okay. Review the Intel trade, June 18th expiration. Yep. So we want to see Intel on that one. It just needs to stay above like the $40 handle, right? We did that broke wing butterfly. That was a pinch point trade. So Intel, it is, where is it? This guy. Oops. So 42 by 40 by 35, pulled in 63 cents. So, I mean, right now it's within the expected move, but I'm looking to see if the 40 level will hold by June. If it does, then we keep our 63 cents. We have a profit trap above up to $2, and our max risk is 237. So it's enough to get at least a 1-to-1. I'm looking at the structure to be in the market, and hopefully we will, just bounce off of some of these moving averages. If we hold the 144, hold the 200-day moving average, just have a little bit of a correction phase and work our way back up. That's all I'm looking at as far as that timing is trying to stay greater than 40. So greater than 40 by expiration. That's all we're looking at. Okay. Pete says, if bonds are not safe havens, where to put the cash? BILSGOV. Do a box spread. Look, I'm literally going to do this. Right now, I can go SPX. Yields have been rising. Let me go out 12 months. Let's look at a 365. Okay, I'm going to go out to March 31st of 2027. I'm going to look at a box spread right now. Watch. This is a 100% win rate. Okay, is it liquid? Yeah, you can pull this out as time passes. You can take partial profits, but roughly this, if you get the proper fill, it's like you want to try to get this thing filled for about the 10-year treasury rate or the 2-year treasury rate. Okay, which right now they're spiking above 4%. 10 years up to like 4.4 right now. So let me see if this works out. If I were to do let's go 6,400 by 6,500. So I'll go 64 by 65. Okay, my butterfly got filled. So double ups got filled. All right, let me put this in the tracker. Okay, we'll see if we get that pin price to matter today. Hopefully it does. So XSP 331, 643. Okay, so $1.50 debit, we can make up to $5 credit. I would be happy at $2.50 to be honest. So if I can pull $100 out of that trade, I'll be happy with that trade. I don't have to hold it all day. Let me go XSP. This is the one I just took for today. 1, 2, 3. So this is a double up there. And set a closing order at, I'm going to try to go after 250. Try to make $100 on it. That way I can just set it and not worry about it. It could pay up to, like, if we're hanging out at 240 or 647, 648 later in the day, that could be, worth up to $3 credit, $3.50 credit, $4 credit. The final minutes, it could be up to $5. But I'll just take the dollar and hopefully walk away. All right, let me go back to that box spread. So, I mean, ways to park your money. BIL is going to be about a 3.5 to 4% treasury mix right now. Let me take a look at those numbers. So if we go US 03 yield, 03 monthly yield, We're at 3.7 right now. So right now, if you park it in BIL or SGOV, you're looking at about a 3.7% yield because you have the US 1 month, which is 3.7 through the 3 month at 3.7. Great. Right now, I'm looking at the 10-year yield, which is 4.32, reduced a little bit off that 4.4. This is why I look at the box spread for a year. Because if I went out to SPX of March 2027, find that here. Let me go. So literally a year. Okay. This should be offering over 4%. Should be close to it. So if I went 6,400 by 65 and then 65 by 64, this would be a credit trade. So let me go 64, 65, 65, 64. There. So right now, out of this trade, pull in. Nope, it's got to be a debit. Sorry, it's a debit that pays $100. That's I don't do the box spread very often because I want to wait for that yield. So box spread is a debit and a debit there. So for there's no way that's going to fill. Not like that. That'd be the best freaking box spread in the world. If I took this trade for, I don't think this is going to fill. If it is, I'm going to try it right now. So this trade, regardless of what price does, I'll build this thing out. I'll show you. There is a 99.99% chance this trade wins. Okay, it should always pay. Because what happens is you take the trade for less than $100, and this trade will always expire at $100. That's a good thing. Let me see something here. I'm going to build this out right now, 64 by 65. Let's go out to the March 31st expiration at SPX. So let's build this out on option strat. But as long as it's over, like if that paid for $100 box spread, if I only paid like $96 for that, that's a 4% yield, right? And that's a guaranteed 4%. So if you wanted to park that capital, you could park that, get a 4% yield, and it's just in your broker platform. Okay. I don't like bonds. I don't like bond exposure. I think that we have a questionable bond market. I think that gold is a better alternative. I mean, hell, gold this year with this rally we saw in gold. Did you know that GLD as an ETF has been an outperformer for a 25-year track record over the S&P? That's crazy, right? So I mean, I think gold is a better alternative than the fiat that is now being in question. The higher our deficits get, the lower our credit gets. We'll be downgraded again at some point. Okay. All right. Hang on. So let me go to SPX. Let's go out to March of next year. So March 31st. I'm going to build out. I don't think they have they don't have a box spread already set up, do they? Probably not. I'll just build it out. So I'll build it out as an iron condor and I'll just make it a debit. So I would be buying the 6,400 call and buying the 6,500 put. And then I would sell and there's my trade. Okay. So right now, buy the 65. There it is. So I got it backwards. Buy the 64, sell the 65. So buy, sell, buy, sell. Yeah, that's the box spread. So the box spread, however you look at this thing, there's your winner. Okay. Now, this shows a debit of 999. This is not what I want to take the trade for. I need this thing to fill at like 95 or 96 bucks. Let me see. I'll take this trade if it fills. It's not going to fill here. There it is. All right. This is a good trade. Now, capital wise, do I want to tie up, 100 grand in these accounts? No, not really. But this trade is going to be, if I can get this thing filled for 94.65, take $100 box spread minus 94.65. This thing actually pays 5.35%. Risk free. That's not bad. Risk free. So I don't mind this trade. For every, for portfolio margin, it's going to tie up about $5,800. I don't want to tie up a ton of cash in this thing, But if I did this for, 2 contracts and I make $1,000 with it, that's not a bad trade. So I'll do this. I'll take it on this account. Let me see if I can get filled here. 93.50. This will fill. Let me go 2 contracts, 93.50. See if this will take. Okay, so this is going to tie up around 20 grand. I've got 352K on this account. Tie up 20 grand with it. That 20 grand would give me about $1,000. So if I get filled for, see, I'm showing 95 right now. Let's try to go 94.75. I don't know. This is gonna maybe work in like 25-cent increments. Let's see what if I get filled. If it's like over $96, I'm not taking the trade. The whole point is like I want like 4 to 5% on this trade. So let's try this mid price around 90. I guess I'll go like 93 and just kind of work around it. So let's do like 93.50. See if it'll fill. All right, so 93.50 not filling. Let's go 75. Not filling. 94. 95 or lower would be great. 94.50. 75. Okay. Kind of my final offer would be like 95.75, 95.50, something like that. And if it doesn't fill, I'm not taking the trade. We're just talking about a trade that, so if you don't want to put your money in bonds, you want to put your money in cash. BIL, by the way, is going to offer like 3.7%. That's a 1 to 3 month treasury mix. Okay. So that's going to offer about 3.7%. Right now, our 10-year yield has spiked almost 50 basis points up to like 4.3, 4.4. What I'm trying to do is build out a trade on SPX that allows me to capitalize on that. And you can essentially build out a risk-free, like 4+% trade. Okay. But it does tie up a lot of cash to use it. And you'd have to sit and probably wait. If I went out for a year, if I want to take half the profit, I got to wait half the time. So by June of 2027, or I guess it'd be, if we go 12 months from today, it'd be maybe like September, October of this year. I can split the time, go out 6 months. Okay. But right, like, see how this is the mid price is like 95 and change. 90. It's like if it's over $96, I'm getting less than 4%. I don't want to take the trade. So 95 pending doesn't work. Let's try 95.50. That'd be 4.5%. Not filling. Okay. 95.60. Not filling. 95.75. That's 4.25%. Not filling. Okay. I don't want to take this thing with fees and everything. If I put it at 96, I'm making less than 4%. That's not the goal. So I'm not going to take the trade. Like this would be a 4.2% yield. It's risk free. But I'm not getting it. It's not getting filled. So I'm not going to tie up that capital. It's annoying. I mean, I like the trade, but I think that the higher VIX and the higher IV rank, it's just the bid ask is a little bit wider. But I'll keep messing around with it. If like I said, as long as I can get something in the realm of that like 4 to 5%, then I don't mind taking that trade in SPX. But it is something that ties up a lot of capital. Okay, better tax wise. I mean, sure, SPX. There's if you put in an SPX, guess what? Your capital gains tax is automatically divided 60/40. So you get a tax break there. It's going to be like it's not quite long term. I guess that particular trade could be long term, but overall, you're still getting like an automatic split 60/40 for long term, short term. So your tax hit's going to be like 20, 21, 22% versus 34% capital gains tax. So it's a better tax break, yes. BIL, I mean, BIL is just a short-term thing. It's just gonna be like a little monthly dividend in BIL. But like I said, if you look at BIL, it's a mix of 1 month and 3 month treasuries. So USO1MY is 1 month yield. It's 3.7. Okay. The 1 and 3 month are literally the same price at 3.7. That is all you're going to get. So if I park $100,000 in BIL right now, okay, if I have a 3.7% yield, let's just go exact 3.69, okay, divided by 12, I would get a 0.3% kicker every month for holding it to maturity. So if I park my money in BIL, 100 grand, that will be up in those little dividend kickers. It would be up $3,700 in 12 months. Okay. And it's liquid, but you have to hold it to maturity just like you do everything else. Like it goes in, it rolls every month, rolls every month, rolls every month. I put trades in there before and I pulled it out. I don't use it as like a permanent trade. You have to be careful because it will potentially close you out at a small loss. So right here, like see how this is hitting maturity? Like it starts out here for the month and then hits maturity. There's where you get your bump. Starts over, hits maturity. So there's your run, like your 0.3% right now based on that mix. Is that what I'm doing right now? No, I'm just letting cash sit on the sidelines. I have it unallocated. I don't mind a box spread. I have BIL, but it's not a huge position because I'm willing to pull this cash out and allocate it on better trades when I think it's appropriate. Would investing in not really. SGov is going to be the same type of mix as this. You're going to get maybe 3.7% SGov and 3.7% um, in BIL. So again, if I could get the box spread, that box spread filled in SPX for $96 debit, that's a 4% yield. That beats this, right? It works the same way. And all I'm going to do is watch as time passes. I mean, my box spread trade is profit, no risk. But this is the full profit. And what's going to happen in real time is as we get to about the 6 month mark, let's say this is a 12-month trade. At the 6 month mark, my P&L should be here, about half of my max profit. So if I could, let's say I could get the trade for $96 debit, okay, it's going to close at $100 credit. So it gives me a $4 winner. That's my 4% that I'm looking for, right? So here, there's my $4 winner. This is my $2 winner if I wanted to just take the profit early. So $200 versus $400. It works the same way, but this is like I said, I would take the box spread if I could get greater than 4% versus right now you're getting 3.7 in BIL. But BIL I could get in right away and it already starts to work for me. Box spread, I've got to play around with the numbers. I wasn't getting filled. I mean, I tried. What was my last offer? 96.80. 95.80 didn't fill. Let me try 95.85. Let me see if I can get 4%. I'll try it. It might be like very comparable too. 95.90, that'd be 4.1%. 95.95, 4.05%. Is it better than the BIL 3.7? This is a 4% yield. Okay, 3.95. Not filling. So I'm not really getting the surplus. I'm not really getting the bonus credit, right? So I mean, BIL and SGov might be just the easiest, most liquid alternatives versus trying to build a box spread. We're probably in an interesting time where like the box spread liquidity is just it's just off. Going out a year in the SPX is a hard fill right now. And also, if I waited, or like right now, it's like if I can't get a 4% yield, it's like I won't take the trade. I can always park it BIL, which is right now the current 1 month and 3 month treasury mix. So anyway, we're spending a lot of time in this, and I'm not taking the trade, but just throwing it out there for some cash. Chart alarm, SPX back to 6408. I mean, all right. Well, we got a couple lines in the sand. 6,400. If positive gamma is going to get saved today, that's the line in the sand. If we break below 6,400, this market falls back for the quarter. I don't know, man. Like this is a bad look to the market. If we are going to gap up like this and fade it all day intraday, that is not a good look. So I'm hoping that for today's sake, the market can, use the intraday open, try to find this positive gamma bounce, and just stay within this level. Give us some type of positivity. At least let the market salvage a win for the day, um, because we have a limited trading week. We are down 6 weeks out of 7 weeks trading right now. Look at SPX on the weekly. This is a pretty healthy correction. And, yes, today's week so far is indecisive, but 1, 2, 3, 4, 5, 6, 7, 6 out of 7 weeks bearish. That's not a long candle cycle. We could certainly go 7, 8, 9 candles in a row, but still, that's a nasty, nasty correction. So the market's trying to fight today, but the week isn't done. It's trying to fight back a little bit for the quarter. We'll see. But like I said, watch the 6,400 level. If it bounces, tries to revisit highs on the day, let's keep an eye on that. So I'll set a chart alarm at the intraday high at 64.53. I wonder what that delta was at 64.50. I'm curious if that was like a expected move delta that the market's just like, nope, fade it hard. So we are here. Okay. Still have a profit trap around 64.05, 20 wide, break even 63.85. I wonder what that 50 was. Shit. Well, now that trade's going to be upside down. So daily profit play, up $1.40 credits, up $60 right now. I would say this with my top and bottom defense, if I can get over $100 on my daily profit play, I just take the profit. I don't want to leave. I don't want to really hold these things into close today if I don't have to. Top defense. There's my end of the month. So that 64.50 is now down. That would have been nice to just take the profit. This one might have a big fat profit trap at the end of the day, so that's kind of worth hanging on to. We still need 64.90, 6,500 on engineered options, which right now we're a long ways from it. So we'd have to have a pretty miraculous surge here into the end of the day. So far, not looking like the case. Oil climbing. Yeah, I know. If oil's up, it's going to be hard for equities to get any bid. Oil is up, and this is not a good look, man. Now, we do have some diversions here. Like we have overbought conditions with divergence on oil. I marked this in my Telegram channel yesterday. If you saw this, we have a potential chart pattern. So this is what gold did. Okay. You go X, A, B, C, D. That was perfectly measured to symmetry. This looks like, oh, you just made this up. No, I didn't. Okay. Low, high, literal symmetry, higher low to higher high was that green line. See that Gartley symmetry? Did that not call a pretty good turn in gold? So technically very obedient despite the crazy parabolic run and this massive correction in gold. But because I had that 200-day moving average on the daily time frame, this is why I thought we're still going to hit the 200-day. And we did. Okay. So I posted the same type of chart on oil that we might see oil do something similar. We have this parabolic run. We have this big move to the downside, low, high, higher, low, higher, high. That is my symmetry. It's around the 115 to 117 strike price. So if we keep grinding up to those levels, I could see that being a turn and oil takes its fall. Everyone's talking $150, $200 barrels of oil. I mean, maybe, but that is a lottery play versus I think more of a real technical trade. But you're right. If oil is going to go up for the day, it's going to be harder for equities to catch a bid. So, I mean, on the day, it's like this just happened in the last like 15 minutes. Okay. Oil from last night. This is around 8 p.m. last night. Oil was down from 107 to about 100. That's why we had that big gap. I think that's where a lot of it's coming from. We'll see. If we break highs, it's not good. If we break lows, let's see if this breaks the lows in oil. We break the lows in oil. Maybe we catch a bid today to the upside again. And we break the highs in oil. Not a good sign. Okay, got a little March Madness trade going today on GLD. We're hanging up above. Yep, so that trade's good. Pulled in. That'll be a $350 winner and a $1,000 risk. So it should be making 35%. Think I'm going to win round 2 of March Madness. Let my man JD know about that. Okay. So that was we go to the daily chart. I think it was the 400 by 399. Yep. So 331 expiration. Buy the 400. Sell the 399. Oh, shoot. 397. All right. We get some other comments here. I saw Cash. I'm catching on my comments here. Cash Gear puts on Uber. Cool. I mean, it's stay out of the way. I got a ratio spread on Uber. We got some nice overbought or oversold conditions with divergence, but I'm looking left. This is 2025 Liberation Day. This is 2024. This is 2024 lows in August. 2023. It's like we put in some dips. This is some pretty good structure around that like $60 handle. My ratio spread for Project Options Edge is the 55 by 50 ratio spread. So I'm just hanging in there. Uber would be down, over 50% if I get assigned. So unlikely, but obviously anything can happen. But hopefully it's going to just chop around a little bit. See if we get April. April still has the weakness window to it. I think that May, June, the market could fight back a little bit. The stuff on oil, the stuff in Iran it just has to go away. It has to take a back seat. It has to be less impactful. But oil prices literally front and center every single day. It is what the equities market is paying attention to. If oil is going to stay above $100, there's going to be a de-risking, deleveraging. There's going to be pressure on the markets to keep sliding lower. So this is a good, like I'm telling you right now, this is a good sign for today that we came back to this positive gamma and we bounced. That's a good sign. Okay. This shows that at least the gamma levels today are paying attention to positive gamma at 6,400. Markets are somewhat defending that. So we want to keep price today above 6,400. Okay. All right. Real quick. I had somebody ask a question on a pinch point scanner. Let me go into the dashboard really quickly. So the get set should be throwing in trades. Yes. Let me take a look. I can have that patched in probably a couple of days. Let's go to one click trading. There we go. Come on, baby. Give us some love today. Give me some love. Give me a pin price. Let's just, I don't know, man. Come on, fight back. Like, come on, market. One day fight back. That's a lot to ask for engineered options. I'm not going to lie. Like getting all the way to 6,500 today is going to be a tall task. But if we can hang out at 6,450, I would not be upset. If we hang out around 6,400, I would not be upset. There is a prop trap sitting in there that's up to $2,000 that covers all my engineered options risk. That makes me positive. That gives me some winners for the end of the quarter. Again, you freaking stand in there and fight, take some punches. It's a nonlinear growth curve. It's like we just fight. Hopefully, we stay above 6,400 for the day. That's positive gamma. All right, let me go pinch point here. Pinch point scanner. Okay, we priced out a lot of these last week. If I go into the get set Intel trade idea, What's the issue? I had a question about pinch point scanner. Why some of those tickers and get set did not populate options criteria such as below. Um, I'm in get set now. The options trades are loading. So take a screenshot. It might just be a buffering thing. That was from March Madness. I was doing that with JD and Jason last week. I faced off against Silas Peters the week before. Ended up making a nice win on oil for 100%. It was, I think I paid 50 cents and closed it out for $1. So that was a 100% gain. And then on gold, I did a GLD broken wing butterfly and pulling in about 30% on that trade. I threw in a $900 trade, got back $300. So that's gonna expire today. I needed GLD to stay above $400, and it's 414 or something right now. So looking pretty good. So it is working. Let me check one other. Let's check another ticker. AMD trade idea. Just taking a bit longer to load than usual, but IPG above to not load options. Okay. Yeah, it open. Okay. So AMD showing options criteria. Let me try IPG, which is my top of the list here. Let's go IPG trade idea. Let it load up. Give me 1 second. I think I have a maintenance guy here. I'll be back in 30 seconds. Hey, what's up, dude? How are you? Doing that spot back? Yeah, okay. Yep. Yeah, it's right behind the door. It's not bad. Okay. Oh, yeah, yeah. No, I'm sure you should. All right. We're back. Trying to bounce back up. Yes. Positive gamma. Let's see what happens. We still here? Who left? I should have had like a standby. Let's see here. This one's looking pretty good for some profit. I mean, I'm getting 150 bucks. Like if this stays above 64.05, I'm getting $150. So I'm not super stoked about grabbing an extra 100. It's more, if I need a profit trap and I get a profit trap, I'd much rather have that to be managed at the end of the day. Ideally, right? So better than 64.50 would be awesome. Or obviously add it. Watching that pin price around 64.75. We'll have a winner on double up if that's the case. With XSP. Engineered options, we need a bit more upside. We need like the 64.90, 6,500. We need those levels to be tested. That offers a decent profit trap. So that gives us, winner wise, 250 bucks per trade or a profit trap of up to $1,000, so we can make 1,250 out of it. Yep, because I just took the trade based on some technicals. I mean, if you were in the live, if you did the video with me, I posted a video inside Pinch Point Scanner for Telegram. So inside my Pinch Point, okay, this video update was like 10 minutes, and I just reviewed all of my trades. So it's a combination of I found the ticker in my Pinch Point Scanner, which means volatility is coming our way directionally. But I also look at the technicals where it's like, do I think it's a better buy or a sell if I want to go directional? Because if I go directional, I can build a better asymmetrical trade where I get better reward than risk. If I go both directions, I'm typically trading the market both ways, losing one, winning one, and trying to still hit like that 30 to 50% take profit. Intel's caught a decent bid. It sold off a little bit. I'm seeing if that major support will hold, which is why I built out the trade that I did. Bill says, I'm interested in doing XSP butterfly spreads at the end of the day. What strike? Well, on double ups, Bill, I just put one because I was trying to pin it around that 647. Like this level right here is around 647.50 on my XSP. So if I go live data, what happened to my, that was weird. Here we go. So let's float this out there. Here is SPX. These are my boxes from yesterday. Got lucky on that profit trap at the end of the day. So today, look, I mean, this thing is so freaking obvious that 64.75, like I could see the market coming for it today. And if it does, great. I'm just hoping that we stay below 65.05 because that's our call spread with that lower delta daily profit play. So if we get there today and we hang out there today and stick there today, we could have a nice winner on XSP for double ups. And we could have, the market might be able to salvage out something where maybe we can survive engineered options with, a break even trade. Again, we need to see the market try to push up to like 64.90, 6,500 for those profit traps. I don't know. We might surprise ourselves. It's a big freaking move, man. But I don't know. There are these days where the market just gives us this crazy upside thrust. And with positive gamma hanging out at 6,400, this could be like a great time to squeeze and allow the markets to get that like trap longs, de-risk, de-leverage. And I'm right there with it. Like I'm right there looking to de-leverage myself. Okay. All right. So let's keep an eye on this. I know my strikes, 64.05 looking pretty good for profit, 64.50 looking better for profit. I might still close that one if I can get at least my $1.50 out of it. Let's see here. That $1.50 here. Like if this one falls back below 64.50, I get nothing for it. Let me see if I can close this one for credit now. I tried it before. Now it's showing like 50 cents credit, 60 cents credit. Let's try to get like a 55-cent credit on this bad boy. Okay, well, that was a $205 winner. I'll take that, and that gets rid of that trade. So that was $1.50 plus 55 cents. That's 205 on that winner. So I'm closing out that one, so I don't have to worry about the pin price now at 64.50. Now my pin price is 64.05. I'll kick myself a little bit at the end of the day if we're trading at 64.50 by the end of the day, because that's a $2,000 profit trap. But if we come back to test that positive gamma at 6,400, I'd much rather be in this 20 wide butterfly with the profit trap at the end of the day versus losing 150 bucks. And it wasn't just that; it would have been a risk of 350. So I'm going to eliminate that risk. This one just turned into a winner. So this $1.50 just closed out for 205. So nice, nice. That'll help offset some of the risk on engineered options, which is fine. Daily profit play still looking good. Bottom defense, showing a little bit of profit here at max 25 cents. It's up 30. I mean, I still want to have the defense in case I need it. Broken wing, this one is still up in profit, but this is going to be hopefully a $150 winner minimum, or maybe even a profit trap over back to that positive gamma. And then we have all of the engineered options. This is a pin price at 64.90. My break even price is 64.80. We could still survive this stuff. Okay, we get $2.50, so 250 bucks if we're at 64.90 plus $1,000 profit trap. So if we somehow hang out at 6,500 today, which I think is not high probability, but if this market gets to 64.75 and just drifts higher, we might get very lucky on some defense for the day. And that would be a wild finish to the end of the month, wild finish to the quarter. The market does play some defense in March, and we might just find ourselves surviving this crazy wild end of the month. Okay, there it is, Beatrice. You got it. Glass half full, positive attitude. Okay, so nice little winner there. Did I give anything back? Oh, well, maybe not. Whatever, I'll take it. Don't be mad about grabbing some extra profit. So $205 there is good. Daily profit play still looking fine. We're at 64.43. We need price to stay below 65.05. Big fat gamma at 64.75. What happens there today? Double ups. The trade alert is sitting. I'm going to put this in Telegram for everyone. If you are in my double up alerts, you'll see this post here. That was a double up alerts. My marketing team just like throwing stuff out there. Okay, so double up alerts. We traded XSP, large, gamma level at 647.50. Entry was $1.50 debit. Pending closing order is $2.50 credit for now. As the day continues, this has a max profit opportunity of $5 credit, or a net $3.50. So I'd like to make more than $1, but that's still a pretty good return. If I have a, set and forget it, make $1 out of $1.50, that's a 67% return on that risk. If we come to, and what I'm thinking is, rather than trying to hold on to it all day for that profit trap, if we get up to 64.75, we may be able to lock that thing in for $2 and grab, or $2.50 and grab that profit. Pinch point, I probably do every couple weeks. Aries, I look at it like every week on Wednesday. That's what Watch This Wednesday is for. But like last week, I added in 9 trades for we took a segment of Watch This Wednesday, Thursday, Friday. I'm pricing out trades. I added in like 9 trades last week. So I don't need to go overkill and say I'm going to do it every week, because a lot of these tickers in my get set environment, or I'm sorry, my go environment, are some of the same tickers that I priced out last week. So I usually let this thing, I'll check it every week, see what pops up on the radar. But usually every 2 weeks or so, I'm building out new trades. That makes sense? Okay. Let's see. I need to double check. Maybe 2 p.m., but likely not later. I've got a doc appointment today for little Carter boy, and then we got a baby appointment on Thursday. Folks, we are T minus 1 week, 2 weeks maybe for baby number 2, so it's coming. It's coming. So anyway, that's happening in the next 1 or 2 weeks. Like I'll probably be morning sessions only. Give the missus as much of a breather as I can, and we'll just be grinding out in the mornings. But it's all hands on deck. So yeah, I'm going to be like trading in the mornings. I'm still obviously doing my stuff, but I'll be less live throughout the day, just for at least a week or two. Donna says full moon tomorrow. Oh boy. Well, that's when the crazies come out. All right. Anyway, we've been going pretty long today. We're sitting in some pretty good shape on daily profit play. So far, if the market's up and just kind of hanging out with this range trade above 6,400 is fine. I'm pretty happy that I close out that 64.50 for a winner. Engineered options, if we get a late day squeeze and we can thrust up into the 64.75, this might be an interesting pin at the end of the day, which hopefully is that winner for double ups. But if we can get this thing to pin and maybe get that late day squeeze, I don't know, we might get really lucky on a move up to like 64.90, 6,500. I still think this is why I'm playing defense on the top side at 65.05, because this one I can eliminate because I took the profit on that one. So I have a profit trap down here. That's 20 wide. I have my profit traps above the 65 handle. That would be break even at 65.15 or so. And we'll just kind of see what the day gives us. So I will go into a 1 minute chart's fine, but at least the market is hanging on to these gains. We got a rally on the day. Futures up 1.44, S&P's up 1.46, SPY's up 1.46, Q's up 1.6, Dow is back up 1%, Russell's up almost 2%, 1.86. VIX decent decline, but not dramatic, right? Not dramatic. What I'll be doing for the rest of the morning is some of my project options edge trades: FCX, MO, Tesla, USO, XOM, XOP. Taking some profit, getting some cash back, getting some buying power back, closing down some positions, de-risking, de-leveraging. Okay. I don't think that's a bad thing. So that's what I'm going to do offline. I'm going to look at doing another live webinar today. Any new thing on waterfall trades? No, we talked about on Monday. We have 2 new trades that got posted. Did you get into those trades with me yesterday in the live session? That's why I run a live session every Monday. The trade is good all day. But if you try to take them today and the market's up, 1.5%, you're probably not getting the same feel that I got. Right? Boy or girl? Yeah, we'll have a girl. We'll have a boy. So Carter's 15 months, and we'll have a girl coming in a couple weeks or less. So I think we're done after 2. I don't want to be outnumbered. But it'll be fun. So she'll probably make an appearance in 3-6 months on my lap. Maybe she handles it better or worse than Carter. We'll find out. Full moon baby. That's where we're having her tomorrow. I don't think we are. But we might find ourselves in the hospital this weekend. We are creeping up on 39 weeks. It's all that stuff. So, I'm sure for many of you, been there, done that. And it's all new to me. So we're just figuring it out as we go. But hopefully we have 2 healthy kids and, make the best of it. It's going to be a wild ride. So, all right. Any other thoughts, questions? Diano, do we want to run anything for right now? I have the waterfall income stream that we could run. I'm going to be live again, probably by like 1 or 2 p.m. Eastern time. So it won't overlap. So we can do both if we want. If we have anybody sticking around that's here for the first time, I can cut the stream on YouTube. We can run this on Zoom. I did that session yesterday. So if you want to run that, we can. And then I'll be back again this afternoon for a live session. I know we have a short trading week because Friday is no markets. We do have non-farm payroll. I still want to get together Friday morning. If you're willing to join me, let's do a Friday. Will be anything here. I want to put like we can do like another anatomy of a trade segment just for fun. We can do like a Ask Me Anything segment. Just come and hang out on Friday morning for a little bit, and we'll just talk shop, see what the numbers give us on labor, so non-farm payroll on Friday. But let's see what the day gives us today. Big number at 64.75. Keep an eye on that gamma right here. Expected move box indicator again. Hopefully, I caught up on all my emails. If you want this indicator, it is $20. Send me an email, chrispulverpub@gmail.com. And we have, I don't know, like 150, 200 happy expected move box members right now. So I use this stuff every day. Obviously, I didn't use the lows today, but I used the low yesterday as far as the price. So there's a method, there's flexibility, but it's a pretty easy routine. It's like I plug it in right from my broker platform. I'm using this primarily on zero DTEs, or when the VIX is high enough that I'm going out like 45 to 60 days and do those, like the Tasty Trade 101 textbook, like 45 DTE, close it at 21 DTE, close it at 14 DTE. Don't let that gamma risk kick in at the end. But anyway, keep an eye on this real-time gamma. That 64.75 keeps going in and out, in and out. So positive, negative gamma around 6,400. 64.75, keep an eye on that big put. I think that's a pin price from the JP Morgan collar trade. We'll see if it finds a way to get there today. But otherwise, it looks like I'll have a winner on daily profit play. Another winner that stays above 64.05. Maybe a profit trap, maybe a pin, maybe. That'd be great. But that engineered option stuff, we need price to get to 64.85 or 64.80 for that winner. So we might take some loss on engineered options, but that's okay. I mean, it's just trading. We're still positive on the year. This market is down 10 effing percent, and we've had winners like every single week. So like I said in that video update that I did yesterday for engineered options, when you have a monthly candle that is all body with no wick, this market is showing no signs of defense based on our expiration. And that's unfortunate because it's a matter of timing. I went out to the end of the month. I went to the end of the quarter, thought the market had some fight in it. It didn't, right? Do we bounce up in April? Maybe, but don't kick yourself like, oh, we should just keep trading with me. We'll be fine. We have 2 trades in this week for engineered options. So if those turn out to be winners, because this is going to be a positive week, come back on Monday, we could have 2 winners. It's like, well, you just chipped into your losses from this week, right? So anyway, good stuff. Yeah, go ahead. Sorry, I'm out. All right, let me. I'll come back in this afternoon. Deanna, take it from here. Let's have a little waterfall income sesh. I'll probably be live again later today, like 1 or 2 p.m. Eastern time, and I will be watching. I've got chart alarm set. Computer's going to be on upstairs, so I'm here. All right, thanks, Deanna.